proceed, Dr.
So I guess I met you before. Is that correct?
Come again?
We met before, eh?
Yes.
Yeah, so I guess you know me. I was just checking the platform.
Yeah.
I'm doing PFM and audit. Huh?
Yes, that is module 6.
Yeah, I'm surprised I didn't post. I thought I had posted a question. Sorry. Or did I post in the wrong group? Do you have the PFM question in the platform?
Which platform, Dr.?
Did you receive the discussion question for PFM? In the discussion forum, mlikuwa na PFM question or audit?
No, we did not have.
What happened? When did I post?
Maybe you posted to the wrong forum. We only had a question on procurement.
Yeah, I'm only seeing a question on procurement. I thought I had posted a question.
No.
Questions. Sorry for that. I thought I posted a question. Maybe I did it in the wrong group. Anyway, now that we are here, I'll take you through the PFM audit. Have you covered procurement? Did Madam Mowini cover procurement?
Not yet. Not yet.
Yeah, because Dr. Ndeto was telling me to cover procurement for him. And I'm not sure I've seen Madam Mowini is the one who posted. So I'll cover.
Dr. The last time I talked to Dr. Ndeto, he said that you're going to cover all.
Yeah, because he talked to me. So I'll check the PFM budget process and audit and procurement. So it should be done by around between maybe 1 hour, 15 minutes or thereabout. So it should be done by 7:30 latest, earlier if we can. Yeah. So so thank you, and sorry for that. I think maybe I don't know where I posted the question. So I'll take you through the PFM. I guess you have already gone through the slides and you have a general idea of what the module is about or what the module is about. So I will summarize the overview of PFM, then tie that with the budget process, then procurement. Procurement is in between, and then the audit, because audit is normally the last part in the PFM cycle. But also this is linked to the planning that we did. I think we did earlier in the program. So we did cover issues of planning and policy. So PFM includes the planning cycle. So we normally have the MTEP budget planning and budget cycle. So the PFM is planning is part of the PFM process. It's only that it comes earlier in this module. We cover it with the policy. So basically, for the overview of PFM, there are quite a number of laws that govern public resource management, and the laws that probably are of importance for us is first the Constitution. All the PFM frameworks are anchored under Chapter 12 of the Constitution. Is the one that sets the overall PFM cycle. So the laws and legislations that emanate from there, or that govern PFM, emanate from the Chapter 12 of the Constitution. So that chapter requires an act of parliament to operationalize the chapter, and then Article 227 requires an act of parliament also to implement the procurement framework. So in terms of the Chapter 12, it's the PFM Act of 2012, which is the governing law for Chapter 12. It's the one that implements Chapter 12 of the Constitution, and then Public Procurement and Asset Disposal Act of 2015 is the one that implements the Article 227 on procurement. So basically, when it comes to the PFM Act, it provides the mechanisms for revenue raising. It also provides the mechanism for budget allocation. It provides the mechanism for accounting and reporting, then monitoring, evaluation, and reporting through audit. So basically, the PFM Act is the main act when it comes to public resource management. The PFM Act is accompanied by PFM regulations. And the PFM regulations of 2015, we have two Gazette notices. Gazette notice number 34, which applies to national government entities, and then Gazette notice number 35, which applies to county government entities. So when you're reading the PFM Act, we need to look at the PFM Act in the two, together with the regulations, because it is in the regulations where the detailed procedures on how we interpret and apply the Act, where they're provided. So you need to look at the PFM regulations of 2015. If you're in national government, you look at Gazette notice number 34. If you're in county government, you look at Gazette notice number 35. Then we have the Public Audit Act. The PFM Act requires that there's established the audit functions, but also, I think it's Article 226 provides for the establishment of the Office of the Auditor General to provide oversight. So the Public Audit Act of 2015 is the one that governs the public audit, which is normally done by the Auditor General. And then we'll be discussing the different types of audits, the internal and the external, and how they are provided in law. Then we have the Public Procurement and Asset Disposal Act. As I indicated, it's the one that implements Article 227 of the Constitution. Then that act is accompanied by the Public Procurement Regulations of 2020. The act had an envision that after it was passed in 2015, within 12 months, there'll be procurement regulations. But the procurement regulations, unfortunately, were delayed in Parliament, and they were only complete in 2020. So they became effective from July 1, 2020. So matters to do with public procurement are provided for within the Procurement Act of 2015, which repealed the Procurement Act of 2005. And we'll be discussing some of the major issues that have been highlighted in the new act. But you need to look at it together with the regulations of 2020 if you are dealing with the public procurement. Then the other pieces of legislation that we use, we normally have treasury circulars and guidelines or regulations. The PFM Act, the Constitution, provides specific powers to the National Treasury, but also there are specific powers that are given to the Cabinet Secretary in charge of the National Treasury. So there are very specific laws, powers that are conferred to the Cabinet Secretary in charge of the National Treasury. And one of those powers is to provide administrative guidelines on matters that deal with public resource management. So any circular that is coming from the National Treasury, it's part of the PFM laws. And the circulars coming from the National Treasury, they bind both national and county governments. But in the counties, the CEC for Finance is also allowed to issue administrative guidelines at the county level. But any administrative guidelines issued at the county level cannot contradict or contravene circulars that are issued by the National Treasury. So if there's any conflict between any circular within the counties with a national government circular, then the national government circular will take precedent. Then, as part of the common law practice, Kenya uses what we call precedents. So any court determinations, rulings that have been made on matters that deal with public finance, and most of these are especially around anti-corruption and abuse of office. So there are a lot of court cases that have been determined that speak about public resource management. So as part of the Commonwealth practice, any decisions and determinations done by the courts on matters of PFM, they also become part of the binding laws of the country. So in terms of the the laws and the regulations, those are the provisions that affect public resource management. In terms of the PFM Act, if there's any other law that is inconsistent or in conflict with the PFM laws on matters that deal with public resource management, then the PFM Act is the act that takes precedence. So if there's any other law that contravenes or is inconsistent with the Public Finance Management Act on any matter that relates to public resource management, then the PFM Act is supposed to take precedence. So that's the architecture of the PFM laws within the country. Now, the PFM laws relate to 4 major issues. There are only 4 key issues that we deal with, and I will just discuss them in in order, and then we'll have probably addressed the main issues around PFM. The first one, or the first thing that is addressed within the PFM laws, is the resource mobilization, and this includes government revenues and public debt. So in terms of the public sector, for public institutions, they are not in business. They are not in commercial business like the private sector. So they're not involved in the business of buying and selling. So when it comes to public institutions, their main or their primary source of revenue is taxes. So for government, the main or primary source of revenue is taxes. So governments normally do not, in a capitalistic economic system like ours, government rarely is involved in the commercial activities of the economy. So they let private sector to do the production, and individual citizens like you and me, the people employed, when you earn is when government comes into tax. So when you talk about taxes are simply diversions or deductions that are made to the economic activities or the gains obtained from economic activities of private economic units, and the private economic units could be businesses and natural persons, or who are the citizens. So if you belong to a particular country, or you are a citizen of a particular country, or you generate income in a particular country, tax becomes a mandatory obligation, and you do not choose whether you're going to pay taxes or not. So for government or for citizens and other economic units, taxes are mandatory, so you don't choose whether you're going to pay taxes or not if you belong to a particular country. So these are prescribed in law. So for governments, there's a sense of assurance of the continuity of revenues as long as there's economic activities within the country. So what governments tend to do is to invest in the enabling environment and also allow private economic activities to continue with minimal interruptions, so that the government can now also have a broader revenue base from which to collect their taxes. So the trade-off here is that ideally the private sector or the private economic units do commercial activities for purpose of profits or for individual gain, even as none of us goes to work so that you can pay taxes. So taxes is simply what we normally call a necessary inconvenience for you to be able, or a necessary evil for you to be able to earn your incomes or to maximize your wealth. So when government are collecting taxes from citizens, the rule of the thumb is that they should not impose punitive taxes so that they interfere with economic activities. So in as far as the government is mandated to collect taxes from the citizens, the rule of the thumb is that you should not impose too many taxes that people or economic units are disincentivized from doing work. And I think this is one of the biggest debates that is happening in the country. You have heard people say, probably the government is overtaxing us, and then the government can take the taxes and leave us with the government can take the net and leave us with the taxes. So people are feeling that they're being overtaxed. But for purpose of economic and revenue growth for a country, we normally say taxes should not become an hindrance to economic activities. So in as much as government is allowed to impose taxes, and in as much as they are mandatory payments, there are certain norms and practices that limit how much a government can collect from citizens, because if the government takes everything from citizens, then nobody will be willing to work. So the government needs to collect enough to run its affairs, but also they need to leave enough money in the pockets of the citizens and businesses so that they can continue and carry on with the economic activities. I think that's a trade-off that normally is required when you come into taxes. So that's the main source of revenue to the government, taxes. The second one, which is not major, there are fees and levies. When you access public services, like you want to get a passport, you want to get your ID, you want to get your birth certificate, or even when you go to school, there's tuition fee. So those fees and levies that are charged by government to access certain public services or certain public goods, they constitute part of revenues of the government. In many cases, they might be treated as appropriation in aid. But ideally, when government charges fees and levies, then it's a source of income to the government. In our current situation, this is not a major source of revenue to the government, but nonetheless, the government of Kenya is now collecting almost close to 100 billion from fees and levies. So when government offers various fees and services, so they collect or they charge fees and levies that become part of the revenues of the government. The third one is penalties and fine. When people commit offense, maybe you're taken to a court of law or you have committed a criminal offense and you go to court and you are penalized, or you do not pay certain taxes and you are penalized, then penalties and fines are another source of income to one government. And normally also it's not a major or a big source of income to the government. But governments collect money from penalties and fines where they're imposed under law. So that becomes a source of revenue to the government. The other source of revenue to the government is normally what we call investing activities. In certain cases, government is involved in investment activities, like, for example, when they own state corporations that are involved in commercial activities. Like in Kenya, we have the Kenya Pipeline, we have Kenya Airways, we have the National Oil. These are state agencies, but they're involved in economic activities. Government also has shares in companies like Safaricom, KCB, what was National Bank, now bought by KCB. So where government owns shares in public enterprises or shares in enterprise that have been privatized, then those gains, what normally come in form of dividends, is part of the incomes of the government. But in our case, I think because of our model of development, we are leaning more on capitalistic systems. So right from the 1980s, government has not been heavily involved in the economy. So like countries like the communist countries in equivalent of China, Russia, where the government owns most of the state enterprises, in our case, this function has been left to the private sector. So, but where we have investment, like we have seen in the Kenya Pipeline, where they make profits, they are able to pay dividends. Even companies like KCB, where government has shares, when they make profit, government receives dividends from those investments. So those become sources of revenue to the government. Government can also dispose its public assets. For example, if we have natural resources like forest, when we harvest trees, when we have wild animals. If, for example, we are able to sell them to other countries or other public state corporations that are sold to private sector. For example, when we issue initial public offering, like it was done for Safaricom, Kengen, and others, those are means of disposing state enterprises. And when they are disposed through proper frameworks, they can raise a lot of revenues for the government. I think if you remember the era of the Kibaki administration, there were quite a number of IPOs that raised a lot of money to the government. We have the Safaricom IPO, we had the Kenya Re, we had the Kengen, among others. So these IPOs were able to raise a lot of revenues to the government. So when government disposes their ownership interest in public enterprises or in public entities, then it becomes a source of revenue to the government. So government can dispose its assets, and they could generate a lot of revenues from those disposal or procedures. Now, there are other mechanisms that are emerging, and these are now related to financial engineering. We have heard about public-private partnerships. We have heard about project financing. So these are part of the financial engineering mechanisms, and there are quite a lot of opportunities from governments that are coming up, so that governments can be able to tap into private capital through public-private partnerships. This is where you bring private actors to participate in delivery of public projects. And the reason why we call it is financial engineering, because public-private partnerships are tailored to the specific needs of the projects that need to be implemented. So where they're well structured and where the government does them well, unlike in the current controversies where we have had a lot of controversies with our public-private investors, in countries like Malaysia, India, and the New Zealand and Australia, these are countries that have done extremely well. There's a lot of private capital in private businesses or in private sector, and if government can be more transparent and more accountable in terms of PPP or project financing arrangements, then the government can raise a lot of revenues from these particular forums. So these are becoming new avenues for government to mobilize resources to achieve their development goals and growth. Now, if the process is well done, there's a lot of capital and government can easily attract this capital. The unique thing about project financing, or the only thing that we need to take care of when it comes to PPPs, for me, it's normally on the values, because private sector is there for the profit motive. Public sector do not exist to make profit. So we need to find a balance between satisfying the private sector, because if private sector cannot get return from this public project, then nobody is going to invest in this project. So we need to re-engineer and customize the contracts in a way that the private investor is able to recover their capital investment with a profit, but also the public is supposed to get value for their money. And that's why we normally say it's done on a case-by-case basis, and it's supposed to create value for both the private sector and the public sector. But this is becoming a major source of revenue to government. Now, when government is not able to raise revenue from these traditional mechanisms, then it goes to what we now call public debt. Now, unlike in the private sector, public debt is treated like a revenue raising measure for the government. So when you prepare budgets and you hear there's a deficit between what the government has planned and what the government is likely going to collect, we normally see the government proposing public debt as a mechanism to collect or to raise revenues to bridge the budget deficit. So for public sector, public debt is treated as a form of revenue. In private sector, it's a capital item, but in government, it's a form of revenue, because eventually the government will have to tax its people to pay those public debts. So when government is borrowing, we normally say it is simply collecting taxes in advance, because what is borrowed through public finance or public raising measures, it has eventually to have an impact on the taxes of the government, because at some point the government will be required to raise taxes to be able to pay those public debts. Now, I know, again, there's a lot of debate and discussion around public debt. And there's nothing wrong with government using public debt. The only problem is when we do not apply it for the right purposes. So if we borrow the money and the money is stolen, then we might end up having a problem. But we can borrow this money and put it into productive investments. Then the expectation is that those investments are going to stimulate revenues to the government. And once that revenues is generated, then we should be able to use that revenue to repay those debts. So when it comes to public debt, again, like the case of the PPP and project financing, what we require is more accountability and transparency in how we use public debt, and to ensure that money that is borrowed is specifically and only used for investment that are productive and profitable. Unfortunately, when we introduce corruption and others in the PPP, in public debt and others, then people steal the gains that needed to be that could have been arisen from these contracts, and that's why sometimes you find we are struggling to pay our obligations, because part of what was borrowed was stolen and was not put into productive part of the economy. But if we are able to borrow money and put it to productive use, and we are able to make profits from those investments, then there's nothing wrong with using public debt. So when it comes to revenue, we have the revenue raising measures and the public debt, and that is part one of the PFM. The second part is what we call the budget process. So I've talked about overview of PFM, but now I also talked about the other module that we were supposed to cover on budgeting. Now, allocation of resources is the budgeting process. Now, what we need to discuss here is the unique things for public budget, unlike in the private sector and unlike in your individual budgets. For government and public institutions, budget is extremely important. It's actually the primary document in public sector institutions. In the Kenyan framework, the constitution requires that for you to spend public resources, you must prepare budget first. So it's a constitutional requirement that before you spend any public resources, you must have provided for in the budget. So in Kenya, you are obligated and you must prepare a budget for you to be able to spend. So it's a legal requirement. In the private sector, budgets are done as part of best practice, not part of legal requirement. So the Companies Act does not require private companies to prepare budgets. They do budgeting as part of best practice or good practice within their governance structures. But for government, it is a legal requirement. And this is because of the nature of public institutions. So the budget process is normally, or the budgets are prepared by the executive arm of government. So it is the executive arm of government that prepares budget. So in our context, it is the executive headed by the president, and in the counties, it is the executive headed by the county government that is charged with the responsibility of preparing budgets for the country. Now, for the judiciary and the National Assembly, and Parliament, the other arms of government and the county assemblies, then they only prepare budgets for their departments or for their agencies. But for the ministries, department, and other government agencies, it is the duty of the executive to prepare budgets. So there's that separation of roles where the executive prepares budgets. Then one of the roles of Parliament, members of Parliament, and also members of the county assemblies is to approve the budgets. And when budgets are approved by the legislature, it's when authority is granted for you to be able to spend the money. So for public sector institutions, you must have an approved budget. And in Kenya, the approved budget must be completed before midnight June 30th each year. So the budget for the next year has to be completed by midnight June 30th each year. And once the budget is approved by Parliament or the county assembly, they approve it on behalf of the citizens. So it is the citizens who ideally approve the budget, but through the elected representatives. So one of the roles of Parliament. Sorry, who is not muted? Lukaya, kindly mute. So when Parliament or county assemblies are considering the budgets, they are considering them on behalf of the citizens. So ideally, it's actually the citizens through the delegated powers they give to Parliament when they approve budgets. And that's why, for example, when you saw during the budget for finance bill for 2024, when the citizens were protesting led by the Gen Zs, it's actually part of the responsibilities. And that's why they could actually validly question members of Parliament when they were considering the budget on whose behalf they were approving the budget, because it is the citizens who approve the budget, but they delegate that responsibility to the elected representatives. So when you're a member of Parliament or county assembly is voting on the budget, the assumption is that they are voting to represent you, or they represent you in that vote. And that's why they are required to go to the citizen through public participation as one of the principles of public finance, so that they can seek the opinions and views of the citizens before they go and vote for the budgets in Parliament. So there's that separation of roles. So the budget is prepared by the executive. It is authorized or approved by the legislature. And once the legislature has approved, when Parliament has approved or the county assembly has approved the budget, it goes to the governor or the president for national government for signatory. So it is when the president signs, we normally call it assent to it, when it becomes a budget. Before it's approved, it's normally budget estimate. So there are certain provisions and members of Parliament can't vary certain things. But when they do it on behalf of the citizens. But there's also that principle of separation of powers when it comes to the budget making process. When the budget is approved and signed by the president or the governor in the county government, then it comes back to the executive for implementation. So it is the executive that is charged with the responsibility of implementing budgets. And that's why you have seen a bit of controversy and arguments around the NGCDF and certain ward funds, where the Supreme Court has kept on saying that there's a conflict of interest when members of Parliament are involved in implementation of development projects. So the assumption is that members of Parliament should remain with oversight. So when the budgets are approved, they come to the executive for implementation. And now we implement the budget through the procurement process. But I'll be mentioning procurement process shortly. So the procurement process is actually one of the key means of executing the budget or implementing the budgets. So when the budgets are prepared, they're implemented by the executive. And as the parliament, the executive implement the budget is when they undertake the procurement. They also now do what we call authorization of spending through the accounting officers or the AIE holders. So one of the other key things that happens during budget implementation is that there are authorized accounting officers. The Constitution designates accounting officers under Article 226, Sub-Article 2, where it is required that any public entity must have an accounting officer to be able to implement or to be able to implement budgets. So they're the ones who are charged with the responsibility of undertaking all the operational and administrative daily issues when it comes to matters of public finance and procurement. So it's only the accounting officer who can authorize payments. It's only the accounting officer who can sign various contracts under procurement. So the responsibility of spending government money is vested on the accounting officer. In the ministries, the accounting officers are the PSS. In the county, they are the chief officers. In the state corporations, they are the CEOs, general managers, or vice chancellors for universities. And in commissions, they are the secretaries. So the law requires that the cabinet secretary in charge of the national treasury, or in the counties, the CC in charge of the county treasury should be the ones who designate and appoint accounting officers in writing. Accounting officers must be appointed in writing. Then it is the accounting officer who issues an AIE, authority to incur expenditure. This is largely an approval or an authorization on behalf of the accounting officer to be in charge or to approve spending on a particular vote. So the AIEs are issued by the accounting officer, and that does not remove the responsibility of that AIE from the accounting officer. So the accounting officer remains the one responsible overall for that. Now, once the spending has been done, we have now the accountants. The accountants are involved now in the recording, preparation of the ledger accounts, preparation of the books of accounts, and reconciliation of the financial statements and financial reports. Now, in Kenya, we are using what we are calling International Public Sector Accounting Standards, IPSAS. So Kenya, we are using IPSAS for purpose of preparing financial statements. So what is happening with the International Public Sector Accounting Standards? Kenya, we adopted international standards when it comes to matters of financial reporting, and then government through the a unit under or a semi-autonomous unit under the National Treasury called the Public Sector Accounting Standards Board. The Public Sector Accounting Standards Board is the one that has been charged with the responsibility of interpreting the standards and being able to provide us with standard templates for us to be able to implement. So if you are an accountant and you're preparing financial statements, what you need to do is to go to the Public Sector Accounting Standards Board, you check the template that have been prepared there, and then you adapt it to meet your needs. There are templates for the SAGAs, semi-autonomous government agencies. There are templates for the water companies. There are templates for the county governments, both county executive and the county assembly. There are templates for the national government, the county, the national executive and parliament. There are templates for level 5, level 6, and level 4, level 4 and above hospitals. There are templates for now TVETs. There are templates for the most recent entry for the secondary schools. So what is now left is for the primary schools. I think they are the last agency to be uploaded into the payment system. So depending on which agency you're working with, you do not need to worry much about the standards. You simply need to go to the Public Sector Accounting Standards Board, check your category, and adapt the template that has been adopted and presented there. As you adopt those or you adapt that particular template, because the board normally interprets the standards, they align with the Kenyan laws and they make it standard. The expectation is that if you are using the template, then you are complying with the International Public Sector Accounting Standards. So now you don't need to worry much. You simply need to access the templates and then be able to implement the templates as they are. Adapt them to your specific needs. And as you adopt those templates, you'll be compliant with the accounting standards. So that becomes the reporting requirement. The other thing I need to say about budgets is probably to distinguish various types of budgets. In Kenya, we have had historical background to budgeting. We started with line item budgets, which were adopted from the colonial administration. When it comes to line item budgets, we normally classify expenditures in broad categories. For example, we have expenditure on public works, we could have expenditure on public health, we could have expenditure on education. So those are broad categories that do not necessarily give you the details on how money is spent within that broad category. So line item budgets were very popular at that time. And the main idea here is you used to present the expenditure classification based on those broad categories: public works, education, health, you could talk about administration, things like that. But it doesn't give you the details on how money is spent within those classifications. For example, when I see the spending for public health, it doesn't give me the details. If I'm on line budget, it doesn't give me the details on how the spending is done within public health. So it only tells me how much has been allocated and then how it was spent. So it gives very little information, and it's normally a very simple approach to budgeting, which is quite popular with the politicians, especially for the political leaders, because they probably do not have time or do not want to be involved in detailed analysis to understand what they are allocating. So that's what we inherited from the colonial administration. So after the line item budgets, we adopted what we are calling incremental budgets. Now, when it comes to incremental budgets, you simply use the previous year's budget, and then you add and subtract based on whether the organization or the entity or the department was able to absorb the money. So if, for example, I had given you 1 billion and you only spent 400 million, then I interpret that you didn't have capacity to absorb that money, and probably next year I add and subtract based on how much you are able to absorb. So the problem with incremental budgeting is that if there was any misallocation, or for example, if last year I gave you more money than was necessary, and then you are able to spend it, it means that that is where I will start as the base, and it means that the allocation of this new year will also be misleading because the previous year's allocations will add a problem. So any problem with previous year's budgets will be actually carried forward depending on whether the organization is able to absorb the budget or not. So that's one of the major weaknesses of this type of budget, because mistakes in the previous budget are normally carried forward into the new budget. Then after the incremental budget, we came to what we call the target-based budgets. In target-based budgeting, we do targets whereby the spending agencies are given a ceiling. For example, you'll be told that your next year's budget will be, say, 500 million. And then that becomes your target, and you are told to work backwards to fit yourself in that particular budget. So that works when you have a limited resource basket where you determine, for example, as a country, we can only raise 1 trillion in revenues. And then you decide how many ministries and departments and agencies do I have. And looking at their mandate, I give them ceilings, and those ceilings become the targets. And once you allocate them those ceilings, you tell them now go and prepare your budget based on this ceiling so that you do not prepare a budget that exceeds the amount that I've told you. So they set the upper limit, and then agencies work backwards to feed themselves. The main problem with this approach to budgeting is that if the ceilings are wrong and people are able to fit themselves in the budget, you can still have a lot of waste within the budget despite being able to do the budget within ceiling. But it's also very a good approach. If, for example, you have a limited resource basket that you can reliably predict, then it becomes much easier to ensure that the people are preparing, or the spending agencies do not give budgets that are not realistic or that are beyond what probably the economy can support. Now, from target budgeting is what we moved to now currently what we call program-based budgets. Program-based budget is what we are doing right now in Kenya. We talk about MTEP program-based budgets. And program-based budgets, what the major change or the major issues within program-based budget is that we introduce performance measures. We introduce performance information into the budgeting process. And introducing performance measures into the budgeting process, what that means is that we determine the resource chain, the impacts, the outcomes, the inputs, the process, and the resource requirement. So, for example, when I'm asking for 100 million for a particular project, I need to demonstrate what I'll achieve with that 100 million. For example, I need to present what outcome will I make, what impact will it do to the economy and probably relevant stakeholders. And then I demonstrate what outputs I'm going to generate. I identify the activities that I will need to deliver, and then I put resources, inputs to those activities. So I normally use the performance information and the performance achievements to justify resource request. So one of the major changes in the program-based budget is that it introduces performance information into the budgeting cycle. The other key thing about performance program-based budgets is that the budget is done alongside or within programs. So you identify programs and then you budget for the programs. And then if you have more than one program, the total sum of your program budgets become your budget. For example, you go to the sector of health, where they have clearly defined programs. You find they have a program for preventive and promotive health. They have a program for curative health services. They have a program for general health administration services. So what that means that is any activity that is being done under the preventive and promotive health, it will be budgeted under that particular program. And then we know the outcome of that program. We know the output that will need to be generated. We know the processes and activity that needs to be done. And then we know what the resources that you're going to require. Any services that are provided in the curative side of services, where now the actual treatment is done, including staff of that department, their costs will be accumulated around that particular program. So this is what we call program-based budget. We do budgets around programs. So for example, I do one program, like in the health, I find in the preventive and promotive, I'm going to spend 3 billion. In the curative health services, I'm going to spend 2 billion. And in the general health administration, I'm going to spend 1 billion. Then the total budget for that ministry or for that department will be the 3 billion plus 2 billion plus 1 billion from each and every program. But this budget will be supported by individual programs. So this is one of the best practices. It is the current best practice adopted by many countries around the world, where they're doing budgets around programs. Sometimes we also call them the project, depending on which geopolitical orientations you are coming from. So when you're talking about program-based budgets, we introduce performance measures, but also we do budgets around programs. Then we normally use activity-based costing to be able to assign cost to the individual activities. So once I decide the budget, I identify the activities and I cost those activities. And then when I cost those activities, as I cost one activity to the other one under a program, so I'm actually building the program budget. So it is the activity cost that eventually translates into the program budget. So each activity is costed on a case-by-case basis. Then the total sum of the cost of the activities is what becomes the program budget. And then the program budget for different programs in a ministry or department or an agency become the total budget for that particular activity. One of the main advantages of program-based budgets is that you are able to see performance information. You are able to see what we are achieving or what we are delivering from the resource requirement. The second key important advantage of program-based budget is that it's able to break down cost up to unit cost. For example, when you go to the free primary education, you can see how much money the government is spending per child each year. So you might find that they are saying that they're going to pay 4,315 shillings per child. So you're able to go to the unit cost. So all they need to know is, out of this 4,315, how many children do I have in the program? So we have a million children in the program, then I'm able to determine my budget because I know my unit cost. So it's able to break budget up to the unit cost. It's a major advantage for program-based budget. The other key thing is it's able to align with the priorities of the government, because for you to be able to determine the programs, then programs go through a detailed selective process. So you're actually able to establish priorities and correctly identify priorities before, as you go through the planning process to identify the programs. So you're able to achieve better physical outcomes from program-based budget, because resources actually go to areas where they are most required under program-based budget. So this is a key advantage for program-based budgeting. Some of the big challenges is that it requires a lot of information for you to be able to develop program-based budget. You need a lot of research. For example, you look at the free primary education, you can imagine how much effort has gone to determine the unit cost, how much we pay in tuition, how much we pay in books, how much we pay in desk, how much we pay in personal emoluments, for you to be able to determine a unit cost of maybe 4,315 shillings. So it's a lot of information that is required. It goes through the strategic planning process, the program designs, and this is a very tedious process. And that's why actually our budget it's a full year cycle. The budget cycle in Kenya starts from August, it ends in June when the budgets are approved. So probably that's the major distinctions, the types of budget, and then the distinctions or the advantages of program-based budgets that we're using at the moment. So the program-based budget is what we're using as a country, and that's considered as part of the best practice currently across many countries. So that's what I'll need to summarize for the budgeting process. The other thing that I'll need to speak about is public procurement. I said we execute budget through procurement. So it is through procurement when we spend public resources. As probably indicated earlier, the public procurement frameworks in Kenya are governed by the Public Procurement and Hazard Disposal Act of 2015. This is accompanied by Public Procurement Regulations of 2020. And I say this repealed the Act of 2005. Now, the main issue that I would need to speak to around this are very few. One, it is how the procurement has been reorganized under the new Act. First and foremost, all procurement duties and responsibilities, which includes appointing various committees, signing tender documents, and approving spending under procurement, have been placed under the control of the accounting officer. So it's the accounting officer who is responsible for all procurement of an entity. They're the only ones who can appoint people to various committees, and they're the only ones who can commit resources of government for their agencies. So there's centralization of the authority when it comes to procurement, and this is centralized on the accounting officers. They're the ones who have been charged with that responsibility of ensuring government resources are spent within the proper procedures under procurement. So there's that centralization of public procurement. Then the second one was the extension of procurement methods. The primary procurement method that is provided in the Act is normally the open tendering, where we allow either national, it can be also sometimes.
Ndio, kama umesha kupatia ni hivyo.
Sorry, kindly mute. So the second is the expansion of procurement methods, and I said the primary method that is provided in procurement is the open tendering. It can be national, it can be international. So there are provisions for different specifications, but this is the default or the main procurement method. But then there are other methods that we can use. We have direct procurement, and there are specified circumstances under which you can use direct procurement, especially, for example, during periods of emergency. Unfortunately, this is one of the methods that has highly been abused in the country, because in direct procurement, you are allowed to bypass the open tendering process, where you are required to identify a supplier and then agree on a price and then deliver. So this is necessary in certain circumstances. For example, when COVID came and you need to buy reagents, you do not have time to stand doing open tendering, waiting for supplies to be delivered. And this, so you're allowed to do direct procurement. The other one really closely related to that is restricted procurement, where you identify a few suppliers. This is, for example, if applicable in cases where there are only a few well-known suppliers in a particular supply of good or service. In that case, then you're allowed to not go for open tendering, but only conduct those well-known suppliers for you to be able to procure. Then, and again, this has commonly been used in the public procurement. It's actually around what was being talked about under the some of the public-private partnerships that we've been hearing about around here. So this is again highly abused. Or what is mainly required in direct procurement and restricted procurement, because you are actually limiting procurement to, or narrowing procurement to very specific suppliers. We need a lot of ethical considerations. So because of corruption, these two methods have highly been abused in Kenya. And that's why you hear people ending up spending crazy amounts of money on things that probably we know the market prices. because of that method. So those methods are allowed in those special circumstances. So they are not like openly available. So they need to be accessed or used or utilized in certain special circumstances. The other key thing the other method I will need to speak about here, there are many other methods. There's the request for quotations, especially when you are looking for either consultancy services or certain specialized services. This where you're required to request quotations. Maybe you can do it annual, or you can use a database of another public entity. And then once you pre-qualify the suppliers, you simply from time to time call those suppliers to ask them to give you their quotes, and then you are able to buy from those pre-qualified suppliers. We have other frameworks like what we call framework agreements. In framework agreements is where you draw contracts with a particular supplier. You might go through an open tendering process, and maybe you're looking for things that you want to standardize, things like furniture, things like electronics. You might want to have standardized products within your organization. So you go through an open tendering and then sign a framework agreement. Framework agreement, you agree for a duration of time and a budget line, so that the people you're pre-qualified or the people you have signed that agreement with, any subsequent dates when you require supplies from them, you simply write for them to confirm the price, and then they supply within the framework agreement. Then you revise when the time lapses or when the budget is exhausted, is when you review the framework. So this allows us to do a space standardization where various products need to be standardized. There are others we call competitive processes, like when you're looking at works of art, like you're looking for designs, logos, and others. We have two-step competitive processes, because you are not able to predetermine. You want the skills of you want a product, or you want to utilize the skills of a professional, and you can't tell what type of logo you are, so you cannot give specifications in advance. In such cases, you're allowed to call for designs, you evaluate them, and then you go to the second stage of tendering and negotiating with them. So these are provided in the procurement, and among others. So there are many methods that have been opened, and these methods have been opened, especially with the new act, to allow a bit of flexibility. The previous act of 2005 was highly accused of being too rigid to allow public entities to look for value for money. So these different approaches have been opened to allow you to limit or to remove some of the bottlenecks that were being experienced in the earlier methods of procurement. The other thing that probably I'll need to mention is that there are a bit of compliance requirements. Like we are supposed to publish the data banks, the people we have debarred, and all the others. There are also the agencies, the Public Procurement Review Authority, and then there's the tribunal. So all these agencies have been established in the new act, but also the new act brought all the agencies of government. There were agencies that were not covered under the 2005 act, the foreign missions and other entities. So any entity that was not covered under the earlier act, they have now been brought under the authority of the new act. Of course, we have had requests for quotations, which are private initiated quotations. These are not purely provided for in the Public Procurement Act, but these ones that you have seen with the PPP, so are actually provided in the PPP Act of 2021. When the PPP Act of 2021 that repealed the PPP Act of 2018 was adopted, is the one that introduced some of these methods you have had, the privately initiated procurement methods. So these have been provided in the PPP Act. I think somebody has gone to court to challenge the constitutionality of those provisions outside the Public Procurement Act. So within public procurement, this is where we spend the public resources. This is where we implement budgets. So there are very clear provisions, and I said one of the key things that have been introduced in the Act is to centralize procurement to the as a procurement officer or to the accounting officer. And the other thing that has been major change in the current Act is the way we constitute the various committees. Previously, we used to have standing committees. Now, all committees of procurement have been ad hoc, meaning that they are assembled for a particular procurement. And once that procurement process is complete, then they stand disbanded and new ones will be established for new procurements. But if you have a project, for example, that goes for more than 1 year, the committee are normally, despite them being ad hoc, Dr. Makia, Ratemo, kindly mute. Ratemo, Dr. Ratemo, kindly mute. So despite
sorry, thank you.
Despite the fact that we have ad hoc committees, the committees remain in office until a procurement is complete. For example, you have procurement that for a project that is going beyond 1 year, maybe it's a 3-year or 5-year project. The committees established will deal with the matters of that particular program until that particular project is complete. So when you talk about ad hoc, it means that they are restricted to a particular procurement up to the time that particular project is completed. Now, the last part that I'll be speaking about is on audit. Audit is normally the last part of the cycle, the PFM cycle. Now, audit is monitoring and evaluation, and the auditor or the audit function is split into 2 types. We have the internal audit, and then there's the external audit. The internal audit is normally undertaken by the staff of the organization. So these are employees of the organization, but they have professional independence in the conduct of their function. So audit is a bit separated from the other accounting functions. So in as much as they are part of the institutions, they have or they enjoy professional independence, meaning that they are not supposed to be involved in day-to-day activities of what they audit. So if auditors are involved in the operations of the organization, then they cannot come back to audit. So they are restricted from day-to-day activities and operations of the organization. So in as much as the employees of the organization, then they are not involved in day-to-day activities. So they are allowed or they are given that professional independence. The other thing that has been done for the internal audit, especially with the recent changes, is that internal auditors report directly to the governing boards through the audit committees. So unlike the finance people who report to the accounting officer or to their supervisors within their departments, internal auditors report directly to the boards if it's a state agency. In ministries, department, counties, and county assemblies and other government agencies, they report to the audit committees directly. So their audit reports are meant for the audit committees or the governing boards through the audit committees. So they're given that to allow that professional independence. Then in terms of administrative or in terms of administration, they report directly to the top office or to the accounting officer. So if it's in state corporation, they will report to the CEO or the DG or the MD or whichever title that you use. So in terms of their reporting, they report directly. In terms of administration, they report directly to the top office. The other key provision in the circulars, in the regulations, that internal auditors are not, the head of internal audit is not supposed to be more than 3 jobs from the top officer. So if that means that the head of internal audit should either be on the 2nd or the 3rd rank, depending on the organizational structure of that particular organization. So they're in the 2nd or that rank maximum. So they cannot go below that under the new regulations. And this is to give them sufficient authority to be able to oversight or audit and access and communicate to the board. The internal auditors provide secretariat to the audit committee. So they're the secretary to the audit committee, but they do not have voting rights. So the committees are constituted under circular issued on July 2016. So depending on your agency, you can check which is the requirement. For the boards, where we have boards, they are members of the board, at least 3 members of the board, and the representative of the National Treasury. In the ministries, department, and agencies, they are supposed to be recruited competitively. And out of those who recruit competitively, one of them will be the chair. Then you have 2 other members, and then Treasury will nominate the 3rd member. Their terms are clearly specified. They serve for 3 years, renewable once. And after the first term, at least 1/3 of the members must retire, despite the provisions for renewal. So in terms of the work of the internal auditors, they are employees, but they enjoy professional independence. We now see it as one of the governance tools in resource management. The other one now, or the final audit, is the statutory audit. This is done by the Auditor General. The statutory audit is legal requirement. This is required by law. And these are normally independent. They are completely independent of the organization. And that's why in Kenya, the Auditor General is one of the constitutional independent officers. So they are appointed for 8 years without renewal. And then you cannot remove the Auditor General in similar circumstances as those provided for judges. So they enjoy professional independence, they enjoy constitutional protection. So once the Auditor General is appointed, they enjoy certain privileges so that they can carry out their mandate. So they're the ones who are mandated to audit all public institutions. Now, when the law requires that every public entity must be audited within 6 months after the end of the accounting period. The accounting period of government is normally June 30th is the last day of the accounting period of government. So that means that by December each year, like now by December 31st, all government entities will need to have been audited by the Auditor General, because the requirement is that they must audit every public entity within 9 months. I think this they've been able to achieve. I guess those of us who are in public entities, you've already been audited, or you'll be audited before the end of this year. And then the reports of the Auditor General are meant for the citizens. So the Auditor General does not report to the executive. So the Auditor General reports to Parliament for national government entities. For counties, they report to county assemblies through the Public Accounts Committee or the Public Investments Committee. But in the counties, the audit report goes to the County Assembly and the Senate, the Public Accounts and Investment Committee of the Senate. So this, when the report goes to this and get to members of Parliament, it is one of their oversight responsibilities. Remember, they're the ones who authorize the budget. Then they provide oversight. And that's why the NGCDF Act and other acts that are under the control of members of Parliament or county assemblies are being considered to be causing conflict of interest, because they undermine their the constitutional requirement for independence and their oversight responsibility. So members of Parliament, when they're considering the auditor's report, then they are doing their oversight responsibilities. Public audit is only complete when the oversight has been done. So the public audit is not complete until until Parliament has considered and approved those reports. Unfortunately, Parliament is behind in terms of the approvals of the reports. So at the moment, Parliament is behind by about 2 years. But public audit is only complete when Parliament has approved those audit reports. Now, when the auditor does, and probably this will be the last thing that I will be speaking about in this presentation, in this summary, when Auditor General audits public institution, or when auditors carry out audit, they issue a professional opinion. And for the external auditor, there are only 4 possible types of opinion. The first one is what we call unqualified or unmodified opinion. So when the auditor issues an unmodified or unqualified opinion, they are simply saying that the financial reports that they have audited are true, they are fair, and they represent that which they purport to represent. So it means that in simple terms, we normally say it's what we normally call the clean audit opinion or the good audit opinion. But when we give good audit opinion, it doesn't mean that the auditor is guaranteeing that there was no fraud. So the auditor simply says, based on the evidence that I was able to gather, so I consider this statement to be true, I consider them to be fair, and I consider them to represent what they say they represent. It is the duty of management to prepare the financial statements. The auditor simply gives an opinion on what the management has prepared. So now they normally communicate to stakeholders and to the owners. In our case, it is to the citizens of Kenya. And they when they give us an unqualified opinion, they tell us that that organization has actually complied with the law, they have done what they were supposed to do, and they do not have major issues. Now, the second type of opinion is what we call the qualified opinion. Now, in qualified or modified opinion, the auditor says that according to my audit, or according to the evidence that was presented before me, the financial statements are true, they are fair, and represent that which they purport to represent, except for a material fact. For example, you might find that you have audited this public entity, and one of the things they put there, they said they had a piece of land that was worth 100 million, but they did not have a title deed, because many public organizations do not have title deeds. So the auditor will say, according to the evidence that was presented before me, the financial statements are true, fair, and represent that which they purport to represent, except for value of land. And they will tell you that value of that piece of land was valued at 100 million, but they could not find ownership documents like the title deed to confirm whether the organization owns or does not own that particular land. So in that case, they will give you the reason why they qualified the report. That possible audit opinion is what we normally call the adverse opinion. Now, in adverse opinion, the auditor says these financial statements are not true, they are not fair, and they do not represent that which they purport. In other words, they are saying these statements are false. So they have enough evidence to confirm that what management is saying is not true, is not fair, and does not represent that which they purport to represent. So they're actually able to confirm. Now, this is normally not a very common opinion because you require a bit of information or a lot of information for you to be able to confirm and actually be able to get to that conclusion. So normally it's not a very common opinion, but actually there are quite a number of public entities that have gotten adverse opinion. So this requires a bit of evidence. The auditor needs to be convinced that there's enough evidence to confirm they are not true. Now, the final and fourth opinion that you can get from audit is what we normally call disclaimer. In disclaimer opinion, the auditor is simply saying that I do not know. I can't tell whether the reports are true, are fair. Maybe you did not give them the evidence when they came to the office, or maybe there were no records. They could not find records, so they can't tell. So when the auditor disclaims your financial statements, they are simply saying that I do not know. I didn't get the evidence. So I cannot prove whether these are true, whether they are not true, so I have no evidence. So when auditors do, they can only give you one opinion. Now, what happens is that the moment you are given an audit opinion, it cannot be retracted. So when the auditor gives the audit opinion, it cannot be withdrawn. So that becomes your audit opinion for that financial year. So every year, the auditor will have to audit, and then they will need to give an opinion. So this is probably what will be the last thing. Maybe the other thing I would just need to mention, many of us have heard about the controller on budget. I will need to mention it here. Because it's also part of the monetary evaluation. Now, controller on budget is the second independent constitutional office, and the controller on budget is normally now, again, they report directly to Parliament, and their mandate is to authorize expenditures from the Exchequer. Exchequer is the consolidated fund for the national government, which is the government account at the central bank, where all government revenues are supposed to be deposited. In the counties, it is the county revenue fund, which is the county exchequer. So controller on budget is the one who is authorized to authorize money to be removed from the controller on budget, from the consolidated fund or from the exchequer. They also monitor budget implementation. Each and every quarter, they normally issue a report on how much money was authorized, how much money was released to the organization, and how that money was spent. So they are part of the monetary evaluation. Previously, we used to have the controller and auditor general. The two functions were separated. So now we have the controller on budget, who does the authorization, the approvals for spending, but also the monitor budget implementation. And then we have the auditor general, who does the audit. Both of them are certified public accountants, and they report directly to the citizens through either Parliament or the county assemblies. So that gives me the summary of the entire of the PFM. I could allow one or two questions before we close. Thank you. Any question or comment?
Okay, good evening.
Yes, good evening.
My name is Paris.
Yes, Paris.
I have a concern with Unit 4, Overview of Public Procurement.
Mm-hmm.
Yeah, so I realized that it is too short. It's too short. Most of the subtopics are not explained.
You mean the materials?
Pardon?
You mean the materials posted?
Yeah, on the public procurement, they were a bit too short to explain. Like, for example, when we went to the quizzes, some of the things that were in the self-assessment quizzes were not well explained in the notes. An example is factors to consider in the bid process, methods of disposal of assets. Some of those were not there. So I don't know how we can be able to get them, or you can be able to help and get a detailed notes on the procurement. Thank you.
Class President, that one I can answer quickly. You can, Class President, you can liaise with Dr. Deto.
I'm the class president.
Okay, what you need to, what you need to do is, because now we cannot, the materials you have are on LMS. Okay, the materials that you have are on LMS. They're normally updated by our e-learning. And I think our e-learning system is on maintenance. It will be going to maintenance. So can you liaise? You have Dr. Deto's number?
Yes.
Yes, you could now request for the detailed PowerPoint presentation. I think he should have the detailed PowerPoint presentations. I don't want to send you. I do have some, but I think because he's the convener for that particular unit, you could ask him to share.
Okay, thank you.
Yeah, I know they'll be separate, but the ones on the LMS, we might not be able to change them as urgently or as soon as possible.
Okay.
So liaise with Dr. Deto, I'm sure he will send you the PowerPoints. Thank you. Any other question or comment? So thank you. I think then we can call it a day.
Thank you so much, Dr. Mumo.
Yeah.
Okay, we are having another
Thank
class
you.
after this class. Don't log out. We are having a class. Ali, maybe you can take over.
Yes. Hello, good evening, everyone. We had planned to have the next class, and I can see the facilitator is in the house. Mr. Tuku?
Yes, good afternoon, ladies and gentlemen.
Good afternoon.
Good afternoon, too.
Yeah, I'm in house. Dr. Mumo, asante sana. I don't know whether
Yes,
Dr. Mumo has already logged out.
No, I'm in.
Oh, you are in?
Yes, so I can log out. You can take over.
Yes, probably you can log out. We proceed with the next class.
Okay, asante sana.
Thank you, Sana Daktari.
Okay, thank
Mr.
you.
Tuku?
Yeah, thank you, President. And this is SMC number
4, module 4.
This is SMC number what?
427 of 2020.
427.
Okay, 427. So
yes.
Let me start by apologizing because, you know, we were supposed to have this class sometimes back. I think last week, but one with Madam Susan Chesang. However, for some reasons, I wasn't able to log in at that time. And I initiated some communication, I think, with the president. Then along the way, we kind of did not come up with an agreed timelines for last week. So I think there's a gentleman who called me, and I don't know whether he's the president or the deputy president. And we settled on the deputy. So we settled on a day today. I think I was expected to log in. I had been given 30 minutes. So I don't know, because I can see now is already 7:25 or thereabout. So it means the time I had been given is already exhausted, because I had been, we had agreed that I log in at around 7, and then I log out at around 7:30. I don't know whether now I will be allowed to have another 30 minutes so that we can go probably up to around 8. Class, is that agreeable?
Okay, yes, you can proceed.
I can proceed.
Okay.
And that is agreeable, Mr. Tuku.
Okay, thank you.
We just
Thank
make
you.
sure that we put it at 30.
That minute. That's
Yes.
okay. And within that minute, because we were having module 4 on readership. And the module 4 on leadership has 4 areas. The first one is what we call leadership in the public service. Leadership in the public service. Then we have within the leadership, after the leadership in public service, which is more of an introduction, we go to the critical elements that you expect of leaders. And that's why we have another 3 broad areas. The first one is management of change. The other one is risk management. Then the other one is management of teams. Ideally, when you look at those 3 other areas, apart from the first one, these are critical elements that you can say would be expected of a leader. That a leader is expected to be somebody who manages or who leads change within an organization. Then the aspect of, again, managing risk, and probably I'll explain why it is looked at as a critical skill in leadership when you talk about management of risks in an organization. Then the other one is where we look at a leader as a team leader or a team manager. And therefore, from Madam Susan, I came to know that you are able to handle the 2 areas, that is management of change and also management of teams or managing of team dynamics. And therefore, I was expected to handle the 2 other areas. So allow me, of course, to take the shortest time possible, and therefore may not want to really go into detail, because remember, these are areas that in the normal classes where we have face-to-face classes, is for each of these units, we require to take about 2 hours. And therefore, I'm only taking about possibly 15 minutes per each of the area. And within that time, I think to be fair and to do justice is just to take you through the areas that I think are very, very critical, so that when you go through your presentations, at least you can emphasize those areas, because they are core in understanding those issues. So if I look at the first one, where we are talking about leadership and leadership in the public service, we in fact intend, all our intention here is to guide the senior managers that you are in a journey, and that journey or the transition, or you are transitioning from being a manager to being more of a leader, so that when you look at a leader, you find that there could be some differences between leadership and management. And I believe probably from even other presentations that may have come out a little bit into the discussion, that ideally, yes, a manager is a leader and a leader is a manager, to put it that way. However, there is what is expected of you as a leader. And sometimes you may find that leaders look at things a little bit differently from how managers look at them. So the first area that probably you need to look at is distinguishing between a manager and a leader. And let me say this, because I don't want again to go so much deep into that discussion, is to say that yes, managers tend to be a bit protective. They tend to be more conservative in terms of the way they handle issues within the organization. Remember, managers, and I know you've already looked at it, managers have these roles that you all know and are clearly defined. The roles of a manager, the management functions of planning, organizing, and controlling, and all those things that I think you've already looked at them from the very first discussion when you had on principles of management. However, when you look at a leader, leaders tend to look beyond those functions. And mainly, while managers tend to look at the short-term goals and how they can be achieved using the systems and the processes that have already been put in an organization, leaders tend to be long-term. And therefore, they sometimes tend to question the status quo. So that instead of focusing on what the systems that are there, the processes that are there, they tend to look at the organization many years from today. So they tend to be long-term. And that is why sometimes when you are looking at managers, we try to say that managers are more of builders. They build. They try to build based on the structures that are there. Leaders are seen to be more of architecture. They are designing an organization that can thrive, that can exist for many years after many years from the time that they are looking at their organization. So there is tendency to look at leaders are a little bit more different. And that's why when you look at these areas that we are talking about, the areas of change management, is because leaders don't fear change. They look at change as an opportunity which you can use to make your organization even thrive under very difficult circumstances. When you talk of issues of team leadership, the idea of you not looking at yourself just as a manager, but as somebody who is more of a coach, somebody who is willing to be part of the team that is actually managing the organization. And I'm very sure Madam Susan was able to actually explain more on that. So there is a lot that you can say that makes a difference between a manager and a leader. And sometimes you'll be saying that managers focus on doing things right. Leaders focuses on doing the right things. Managers tend to sometimes focus on the status quo. They want to maintain systems, structures. Leaders are ready and willing to take their organizations through a change process. They don't fear change. And therefore, managers tend to be short-term, while leaders tend to be long-term in nature. Managers focuses so much on means of achieving goals, while leaders tend to look at, by the end of it all, what is it that we are aiming at achieving in the long run. Managers tend to be more focused on solving the day-to-day issues on the organization. Leaders tend to inspire and motivate so that the people they are leading can focus, can see beyond the problems that are there currently in the organization. So that journey
Kindly,
is,
Shirley, mute your microphone, Shirley.
yeah. So
Kindly
yeah,
mute.
because yeah, somebody is actually yeah. I hope yeah. Okay, that has been sorted out. So that is the first thing that we'd want to discuss, and I think you'll look a little bit more on that. The other area that is also very, very critical for you to look at is then what do we desire of in terms of qualities of a good reader? And I think this is a question that I'm very sure you are not hearing it for the first time. First and foremost, even within our constitution, we've already identified what is expected of our readers. I think when you look at Chapter 6 of our Constitution, when you look at Article 232 on what you expect on values, public service values, already we are already, all Article 10 of our Constitution on national values, already it is already seen, or you can already be able to see what, as a country, we have proposed to be what we expect of qualities of good leaders. In fact, the irony of it, and sometimes what sometimes becomes a bit not very clear, is that when probably people are choosing their leaders, and they do that through the electoral processes in Kenya, sometimes we don't tend to see people being, influenced by those values, so that we elect leaders who probably then have those kind of qualities that would be expected: qualities of competence, qualities of integrity, leaders who can be able to make decisions, leaders who are expected to be have confidence, and many things that Daventry and beyond, of course, leaders of integrity, leaders who are patriotic, as already provided in our constitution. So I think that's the dilemma that we are in as a country, because sometimes when we see the kind of leaders that we have, sometimes is not what probably you would expect, even what is already provided in our constitution. Then the other area that sometimes you also want to focus on is the leadership styles. And I think this is also a very interesting area that leaders tend to prefer. Because when you talk of leadership styles, it's about preferences. Because even when you talk about things like leaders who are autocratic or dictatorial, it is only that we tend to find that some of their behavior more moving towards that direction. So we cannot say that there are leaders who are 100% autocratic, as opposed to being democratic, where they are able to involve other people in whatever they do. It's more of a preference, or tending towards that kind of trait or character. But then ultimately, then we talk of leaders as being either autocratic, democratic, or participative leadership, leaders being either charismatic kind of leader, others being laissez-faire leadership, and all those kind of things. And I believe that's a discussion that you can have. But then we are more looking at probably then what do we expect of the leadership style in the 21st century? What is it that probably today we can be saying that may be the kind of ideal leaders that we look at this particular time? And that's when we talk of leaders who are servant leaders, or value-based leaders, competence-based leadership, aspirational, visionary leadership, and all that. And even we talk about leaders who are more transformative as opposed to transactional leadership. So when you go through the literature, you will see all that. So that then we are saying in the 21st century, mainly we are looking at leaders who are more transformative in nature. And then you go deeper in understanding then what are these kinds of leaders that we talk of them as transformative leadership? Actually, at the Kenya School of Government now, we already have a program when you talk about, we are talking about transformative leadership. I think after you've done your strategic leadership development program, then we have a 5 days program on transformative leadership. What is it that we look at? And then you'll talk about the 4 I's of what we call transformative leadership. The first I standing for idealized, influenced leader, a leader who is a role model, idealized. The other one we talk of inspirational leaders who can inspire others, who have team spirit, can motivate, can provide meaning and challenge, inspirational leadership. Then we talk about the third I when we talk about intellectual simulation. These are leaders who are ready to provide the quality of creativity and innovation, intellectual leadership. And then we talk about individualized consideration, where we talk about leaders who can mentor others, who look at others as individuals rather than a group of people. So we talk about transformative leadership as a form of a leadership that probably we should be expecting the future leaders, the 21st leadership to embrace. Then another area that we usually talk about is strategies, because most of us who are in this senior management course, chances are we come from the public service. Then we are asking ourselves then, what challenges are there for us as leaders in the public service? And as you are all aware, you find that the public service is a very complex kind of system, as probably when you compare it with other types of organizations. And because of that, then you find there are unique challenges which you have to face as leaders in the public service. Issues of like leaders having to deal with matters of bureaucracy, political patronage, sometimes mediocre culture that you may find happening in certain institutions, nepotism and tribalism, issues of sometimes of poor remunerations and disparities that may be there in schemes, salary schemes and all that, inconsistency in policies. There could be many challenges that we may be facing in the public service. I wouldn't want to say what I mentioned are actually the challenges that are there. I'm just saying that you may find some pockets of these challenges in the public service. And sometimes then when we are looking at it, then we want to ask ourselves, how then can we overcome some of those kind of challenges? Of course, some of them may not be things that you may be able to do sometimes at your level, but broadly looked at within the public service is that the public service should be looking at making the organizations more flat initial, rather than very hierarchical, because the more hierarchical organizations are, the more bureaucratical they are. We should be focusing towards reducing the red tape that sometimes exists in the public service. We should have leaders who have what we call multidimensional thinking. They're able to look at things in a broader way. As leaders in the public service, we should embrace professionalism, because you will find that to overcome most of those issues then requires us to focus on our professionalism, because most of us are professionals. You find we have leaders who are engineers, accountants, public relations officers, and marketers. And in each of those professions, then you find there are certain values that are expected to be cultivated. So then we say one way of overcoming some of these challenges is for us to embrace those kind of professionalism. continuous sensitizations and training so that we are able to, we are reminded, because it's not that we don't know, we are just being reminded that this is what is expected of us as managers in the public service or leaders in the public service, and many, many other things. So I think, ladies and gentlemen, I would want to go up to there on matters leadership, so that you can allow me to speak briefly about risk management. And we are saying risk management, ideally, is a leadership scheme, so that when you talk about risk management, ideally, we are saying that we need to be more of leaders than managers as far as matters to do with risk is concerned. And one of the issues that is very critical also when we are looking at risk is to understand the conceptual framework under which we are talking about risk management. What is it that we are talking about when we talk about risks in the public service within the context of public service? And of course, risk is a common concept. It is not that it only applies in the public service. Whatever kind of organization you have, it is subjected to certain amount of risk. Not only organization, even you as an individual, whatever you are doing, the activities that you are involved in are also subject to certain amount of risk. So the understanding of risk is very critical, especially now in the public service, where you are managing organization, very broad organization. And then when we are talking about risk, what is it that we are talking about in terms of the conceptual framework? Ideally, we should be able to differentiate between, because sometimes when you talk of risk, many people look at risk as just uncertainties that are there. Those circumstances that are quite uncertain. But I would want also to mention that not all uncertainties are actually risk by nature. Because when you talk of risk, we are looking at a situation where it is possible for us to be able to come up with a framework that can enable us manage those risks. But remember, there are situations or circumstances or uncertainties that may be very difficult for us to manage as managers and leaders. And more so, if probably we are not able to pick out the probability of them happening. So that even if there are risks and we are not very sure of the probability of them happening, and be able to quantify them and be able to get a possible probability in terms of chance, then it may be very difficult for us to qualify some of those as risk. And therefore, when you talk of risks here, and within the context of public service, and also even in the corporate world, ideally we want to say that, yes, there are two things. That one, yes, it is a risk because there is a chance. If it is 100% that is going to happen, then that is not a risk. If there are very slim chances of it happening, then again, that may not really quantify, reach a point where we can then quantify it as a risk. But if it is an event that has a chance, which is substantial in nature, that it may happen, then that qualifies to be a risk. But then, beyond that, that probability of it happening should be quantifiable. So you can say the probability of it happening is 10%, is 15%, is 20%, and all that. Then the next one is that if it happens, it has a potential for two things, either a loss or a gain. Because when we look at risk, we don't only look at them as providing a loss No, it can also come with a chance of a gain, depending on how you will handle that. Two, it is a risk because it affects the achievement of certain objective. So because you have objective, remember within the public service, we have set certain objective. So if there is a chance that our objective will not be met because of that risk, then that risk or the chance of that happening, then that become a risk to us. And therefore, I think you may need to look at deeper into understanding that. The other thing that, apart from understanding the conceptual framework, the other one that you should also focus on is the process of managing risks within the public service or within any organization, because there is a clear step-by-step process under which we manage risk. And there are clear steps. First and foremost, in understanding about how to manage risk, you need to understand that the risk is happening within a particular environment. So the understanding of that environment, the context in which that risk is happening, is very, very important. And I think that is usually the very first process that you must engage in understanding in the process of managing risk. So establishing the context, within which risk is being managed, the strategic context in which the risks are being managed. So that you need to understand the whole process of the business, how the objectives the business intended to achieve, so that then you understand what is it that we're talking about. Then the other one, the second step, is understanding the goal setting. What is it that you need to achieve as an organization? Yes, because it is within that context that risks exist. Yeah, so you must understand. And when you look at many ministries, I know you have what we call your strategic plans. When you are looking at your strategic plans, one of the areas that you look at, and it's part of that process in the development of the strategic plan, is what we call understanding the environment, the SWOT. That is the strengths, the weaknesses, the opportunities, and the threats that exist within that organization, and how they can impact on the goals that you have set. So that also become another critical step in understanding the risk process. Then beyond that is which is what we call risk identification. And risk identification, ladies and gentlemen, is very, very critical because there exist many risks, but you must come up with a very good way of identifying those risks that are critical to you. Yes, because risks are many. And therefore, and I think when you'll be looking at your note, you see we have proposed the various methods that you can actually use to identify the risks that exist within the organization, so that after you have done that, you go to the second, the next process, which is actually after you have identified the risk, then you go to what we call risk assessment. And risk assess two major things or major processes. The first one is what we call risk analysis. And under risk analysis, you are focusing on two things. First of all is asking yourself, what is it that can go wrong? What is it that can go wrong? And what is the possibility of it going wrong. So those two things you have to analyze, so that then you can be able to categorize risks. So it will help you through risk assessment. You're able to categorize risks as risks that can happen very easily, risks that are a bit remote, and all that. Within the risk analysis, then you will be moving to what we call risk evaluation. And risk evaluations has two major issues. First of all, as an extension of the risk analysis, is for you to be able to get the probability of those risks happening. So on one hand, you have the probability, which can move from very low to very high. Then on the other side of the risk evaluation, on the other side of risk evaluations, is the possible impact. And it is the combination of the two that you are able now to come up with what we call a risk matrix. And this risk matrix will have two things. On one hand is the probability of risk happening, and on the other hand is the possible impact. And let me say, the combination of the two gives you what you can then say are the possible reactions to this risk. Because, for instance, if the probability of risk happening is very low and the impact is very low, then you shouldn't spend too much time, too much effort, or even too much money or resources in addressing that risk. But that doesn't mean that you ignore it completely. But it enables you to know that, yes, there could exist those kind of risks, may have low impact, but may not have a lot of, may have low probability of happening, may also not have, yeah. If you continue doing that matrix, you realize that there are those risks that have very high probability of happening and also have very high impact. So those are the risks that you are going to code as red. I think somebody has unmuted his mic, Kaidre, whoever it is. So if you find that a risk has very high probability happening and have very high impact, those are the kind of risks that we say are high level risks. And these are risks that as leaders and managers, you must be very conscious about them. And we actually say those are risks that must be addressed by the highest level, the top management within the organization. And of course, there will be those that have medium probability of happening and medium impact. Those are risks that you can code green. That is to say that, yes, these are risks that are possible, can have medium impact, and we must also be conscious about them, and you must also start looking at how you can work on them to avoid a situation where they go to high levels of probability happening and also bringing very high impact. So that happens when you are doing what we are calling risk evaluations, which is the fourth step in the risk management. And then after that, we go to what we call risk treatment. And risk treatment is about now coming up with the possible ways through which you can actually intervene, or you can actually treat those risks. And there exist various approaches. Among them is sometimes you can avoid certain risks, just taking action to eliminate the activities that give rise to those risks, so that it's not going to be very expensive for you, but it can prevent such risks becoming too problematic to you. But there are other possible ways of dealing with these risks, like sharing of the risks. If you cannot avoid, you can actually involve others. Even when you talk about things like insurances, remember when you take an insurance, you are also kind of sharing that risk with other parties, other third parties. Or even when sometimes you decide to outsource certain services from other organizations, could be after realizing that you may not be in the best position to deal with those risks. All these are ways of sharing risk. Remember, there are risks that can also be exploited. Yes, there are risks, there are problems, but as an organization, how do you position yourself to ensure that you exploit these risks? Then there are risks that you can actually just accept, like when we have talked about very low risks with very low impact. Sometimes you can accept them, meaning you take no action, but be aware about them so that you also be monitoring them just to prevent them becoming problematic to you in future. So you do what we call that now, risk treatment. Then beyond that, then is the continuous monitoring and evaluations to assess whether risks are increasing or decreasing, and which gives you the opportunity to intervene at the most appropriate time. And then the fifth in the process, actually the sixth one is actually communication, where then you need to have a system where you are able to be getting feedback on how risks are either increasing or reducing, and whether you are getting new risks and all those kind of things, which is also very, very important. And after you are able to do that, then we talk about reporting, where you have effective internal and external communication to all the relevant, both internal and sometimes even external partners, so that you are able to address most of those risks that have already been identified. So that way then you are able to have a very good framework that you can use to manage risk. So I think I've outlined the most important area that probably you will need to go deeper into your note, so that you can get more clarifications. But broadly, those are the broader areas under the those two major topics that I think you need to emphasize even as you also continue with your learning. I am usually very obedient. I don't want to, because we had agreed that I try to maintain my class up to around 8. Mr. President, I think you can allow 1 or 2 questions. If there is an urgent questions that probably I would want me to address, or even a comment, and then we can call it a day. Is it, Madam President?
Thank you, Mr. Toko.
Yes, sir.
That was very informative. So maybe I can turn to the class. I'm not seeing any hands raised. Does it mean that we are at par with what has been presented? Any question, any concern, any comment?
Yeah, I think the class has been long, and it's like participants
People are tired.
are already exhausted because they had another very long class. So we can allow them to relax
Yes.
after a long day. Mine is to wish you all the best in case of any issue that probably may require any clarification. I'm always available And I think already the deputy class, the president and also the deputy president of this class have my numbers. And therefore, in case you have anything that you would want us to engage, kindly you can liaise with them so that then if there is any clarification or anything, I can be able to respond to it. So mine is to wish you all the best and enjoy your evening.
Thank you, Mr. Toko. Possibly we can just close with a word of prayer. I know everyone is tired. Tombok, lead us, please.
So let us pray. God our Father, I thank you for this evening. Thank you for the sessions we've had, good Lord. May they strengthen us to make us better managers and better leaders for the institutions that you've blessed us with in this country and even in our personal lives. Thank you for the lecturers and the facilitators of these sessions, good Lord. May you bless them and increase their abundance. As we depart from these sessions, good Lord, we ask you to be with us, guide us, and protect us. We ask all this through Christ our Lord. Amen.
Amen. Amen. Amen.
Amen.
Amen. Thank you. Thank you.
Amen.
Amen.
Thank you, Daktari.
All right, thanks. Good evening.